Okay, I guess I'm old enough to remember that radio jingle. Oh, thank heaven for 7-Eleven. Do you remember that? That was years ago. By the way, happy 7-Eleven Day. Not the convenience store, but it's the 11th day of the 7th month. You already knew that, though, right? Okay. We've got a big report coming out from USDA. That's at 12 o'clock Eastern time. So we've got, what, less than 3 hours before that rolls out. In front of that, how did markets trade in the overnight session? Let's start with corn. And the September contract still below $4. New crop, 4.14 1/4. It's down 2 1/4. Soybeans, November at 10.10 1/2, down 3 1/4 cents. You know, we had a flash sale reported overnight to Mexico, and actually broke it down before I came in. It's over 8 million bushels. So nice, and we'll find out from Brian Hoops what that means in just a moment. Wheat market and Chicago, September most active, down 3 at 5.51 1/2. Kansas City, nickel lower, 5.29 3/4. And the cotton market is off 15 points at 67.58. So let's go to Springfield, Missouri. President, Midwest Market Solutions, Brian Hoops. Brian, great to see you.
Good morning, Tony. Yeah, you stole my thunder there. That soybean sale this morning, it was for the new crop marketing season, 25-26, 8.1 million bushels of beans sold to Mexico. Our new crop sales pace for soybeans, it's very slow, similar to what we saw a year ago at this time. So we're off to a slow pace. China's notably absent. In fact, they haven't bought any soybeans from the United States at all this year. And the USDA is going to update their export numbers today. I really don't look for much in the way of any production changes, certainly not any cuts in production of corn and soybeans. Increases are unlikely to be seen as well. Last time the USDA increased corn production in the July S&D report was 22 years ago. It's been quite some time. They've never done it in soybeans. So we don't look for much in the way of changes as far as production. Unlikely we'd see any cuts. They only cut yields when we've had a really poor growing season. We have anything but that right now. But we can see some changes in the demand side of the equation. The USDA is really forced to increase their corn exports by at least 50, maybe 100 million bushels, which could be supportive to the market as it increases their export numbers, decreases our ending stocks for the old crop, and decreases the carry in for the new crop, and tightening our balance sheets a little bit. So that's the one positive that we see. But even if we have a positive report, is the market going to sell a rally? And I think that's probably what's going to happen today.
Yeah, that's a good way to look at it. And again, we'll find out in less than 3 hours as that report comes out from USDA. All right, let's take a break. We don't have to wait 3 hours to talk livestock futures. What a big day yesterday in the market. We'll talk more about it. Market Day report continues after this. Cash cattle, we have sold some earlier in the week, but looks like the asking prices are holding at $230 in the south and $240 in the north as we start the trade in about 10 minutes. Now, live cattle futures yesterday settled in mixed territory as the August slipped 70 to 219.07 and October off 35 at 217. And then you roll out to that February and April contract, and they both settled in higher territory. Feeder cattle, what do we see there? Feeders higher across the board. Again, pretty amazing day. That was, just look at the August, 318.65 as the low, up to 326.87. And if you just kind of round it up here, that's an $8 trading range. 321.60 is where the contract settled yesterday. Let's bring in Brian Hoops, President, Midwest Market Solutions. An $8 swing in a market in one day. Wow.
Just a normal day in the cattle pits, right? It's quite a day. Big outside day reported in the live cattle futures, not so much in the feeder cattle. Now we've had these many times, and we've shrugged them off every time, and have come back and made new highs. Now we're getting late in the summer, and demand's starting to suffer a little bit. Packer margins are hurting because the cutouts have not kept up with the cash trade. So this may be one of the times where we've put in our highs, and maybe we won't come back from that. August cattle did narrow to the cash markets yesterday. At one point in time, they went up to 22.50 or so, and the cash is around that 223 mark. So they really narrowed the spread, closed well off of it. However, just a handful of cash trades so far. Some 370 to 372 dressed. That's steady to $2 better, but Southern trade still looking for that to develop, as you mentioned, around that 223 bids, 228, 230 asking prices. Somewhere they'll meet in the middle, most likely at some point this week. And it's going to remain a volatile week. We're probably going to see two-sided trade today with an emphasis to start on the negative side, at least in the early opening sequence here this morning, until we get some hedge lifting and maybe see that higher cash trade. We could see a rally late in the session.
All right, and that's on the cattle side. What about the hog side? Here's where hogs finished up the session yesterday, mostly lower, down 97 on the October at 106.25. And again, as we move forward, thoughts on the hogs?
Yeah, I think that is a market that has shown its colors here and has peaked out. We're looking for some sort of retracement, but there's key support just underneath the market. August contract, it breaks support today. It's going to find a lot of sell stops underneath it as we've been in a narrow trading range for the last week or so.
Yeah, just rolling through the rest of the charts here. There's the 5-day on the hogs. And again, just about the time you think, well, we're headed lower, then we moved it back up during the early part of the week. And then just looking at the intraday and what we saw yesterday, just a slow, steady stroll lower. Brian Hoops is with Midwest Market Solutions. Great to see you, Brian. Okay,